Hey, good morning, good afternoon, good evening, everyone. Depending on from which place you have joined this webinar. If you are looking for FinancialForce Accounting basics, you are at the right place. Let's give a couple of more minutes for people to join, and then we can start. So again, good morning, good afternoon, good evening, everyone. If you are looking for FinancialForce Accounting basics, you are at the right place. And I think we are on time, and let's start. So what we would be covering today would be what is accounting, 8 key terms of accounting which we should always remember. Why do we actually need FinancialForce Accounting ERP for our accounting systems? And then we are going to talk about FinancialForce Accounting Objects. And then at the end, we will give you a preview of what you can expect in our next webinar in continuation of this. Okay, but before we start, I actually want to update you about some housekeeping items. After this webinar, everyone who has registered for this webinar will be emailed the presentation and the recording of this webinar. And at any time in between, if you think you have any questions and answers, you can actually post it in the question and answers chat box, and I will try to answer either at the end or in between as required. And before we launch, I just want to launch a quick poll to understand the kind of audience we have today. So just launching this poll. Right, so you should be able to see it on your screen. So I just want to understand at what stage of FFA implementation are you in? Are you actually planning to buy and implement FFA, or are you in the middle of implementation process, or you've already implemented FFA and are actually in the support mode where you are training the users or supporting them on daily issues? So just pick up one of the choices. I will give 30 more seconds for others to fill in. Okay. So I think almost everyone has filled in. And according to the poll, we have got most of them who have already implemented and are actually supporting the users on daily basis. And then we have a mixed audience who are actually planning to buy and implement FFA and are in the middle of implementation process. So that's good. Good to understand that. Anyone who has joined just now, maybe 5 more seconds for this poll. Okay, that's fine. So these are the poll results, as you can see. So let's get started. So before we actually understand any FinancialForce Accounting ERP, it's very important to actually understand the basics of accounting, right? Because unless you understand the basic terms of accounting, it is impossible to actually understand a FinancialForce accounting software, right? So in this webinar, we have planned to take you through the basics of accounting, what you should expect out of a FinancialForce Accounting ERP, and how actually FinancialForce Accounting helps you in achieve your goals. So let's start with what is accounting, right? So accounting is the process of tracking and recording any financial activity, right? And whether you are in a business or in a small organization, people actually use accounting to assess their financial health, right? So basically, accounting helps you answer these three questions. So who is doing well, right? Who is doing poorly? And when you say who is doing well, what does well even mean, right? Because in accounting, you need to have facts and figures, you need to have data to understand whether I'm actually doing well, or am I actually burning cash, or am I actually not earning revenue or running in losses, right? This you can only get if you have got data in place and you are maintaining your financial accounting records. So these are like the Bible of accounting. If you understand these eight key terms of accounting, half of the job is done, right? You will be able to relate your software through these key terms, because every accounting software that you use, you will find these 8 key terms there, right? So let's start with the first one, which I think most of you have been familiar with. It's the chart of accounts. Okay, we will go in details on all these key terms accounting concepts in the next few slides, but just to give an overview of these key terms of accounting, first is chart of accounts. Now, chart of accounts is a list of all your company's accounts together in one place. Okay, so we will discuss on what we actually mean by chart of accounting and what are the basic components of a chart of accounts in the next slides. Then you have something called accounts payable. Now, accounts payable, as the name suggests, is something that you owe to creditors. That is something that you have to pay, right? That can include your bank loans, unpaid bills and invoices, debts to your suppliers or vendors. Anything that needs to be paid from your account comes under accounts payable. Third, obviously, the reverse of this, accounts receivable, because anything that you pay obviously comes back as well. So it tracks the money owed to a person or business by its debtors. It is the function opposite of accounts payable. Anything that you receive, right? It may be customer invoices or the money that you owe to the customer. Everything that comes to your account comes under accounts receivable. Then if you are in accounting, you must have heard of this report balance sheet, right? Very, very common term used in accounting, which is actually a standard financial statement, right? It specifies the business current state regarding its asset, liabilities, and equity. Now we will discuss assets, liabilities, and equity. What do they actually mean in the subsequent slides? But balance sheet is all about assets, liabilities, and equity. Similarly, and these are the kind of reports that you expect from a FinancialForce accounting software. Okay, so if you don't understand these reports, right, you will not be able to understand the accounting software as well. Similarly, another report that is very common, bread and butter of an accounting software, is income statement. Now, income statement is the statement of profit and loss and revenue, right? It has 3 components: revenue, expenses, right, and profits, right? Anything that you are earning for your company, or the income from, or your income from which sources is it coming, right? So income statement. Then we have something called cash flow statement, which is the cash flow of like what is flowing in, what is flowing out of the company during a specific accounting period. That is called cash flow statement. Trial balance, which I think most of you have heard of, is actually a list of credit and debit entries that you do for your internal audit purpose, right? It is done to make sure that your credit and debit values are equal or they match, right? And if they don't match, you have to work out and do some adjusting entries to match the records. And obviously, last but not the least, journal. Journal is the book in which all your financial transactions of a business are recorded, right? So these are the 8 key terms of accounting, which every accounting software takes care of. And if you understand these terms, I think the knowledge of accounting ERP becomes very easy. So let's start with chart of accounts, right? So what is chart of accounts? As I already said, it is a list of all your company's accounts together in one place. And it provides you with a bird's eye view of every area of your business that spends or make money, right? Now, so chart of accounts can also be called the general ledger accounts, right? So the general ledger accounts come from the chart of accounts book. So what are the main 5 parts of chart of accounts? You have assets, you have liabilities, you have equity, you have revenue, and you have expenses, right? I think everyone must have heard of these things because that is something which actually sets the tone for your general ledger accounts, right? It's all assets, liabilities, equity, revenue, and expenses. Now let's try to understand. I think most of you might be knowing. It's always good to understand what each of these terms mean in chart of accounts. So here you can actually see the chart of the accounts table, right? On the left-hand side, you can see these numbers, right? Then these numbers actually display the general ledger account numbers, right? This is the account description, right? This is the account type. Account type can be, as we saw, can be assets, liabilities, equity, revenues, and expenses, right? So what does assets mean, right? Assets, as the word specifies itself, right, is any resource your company owns, right? It is an asset that you own, and that provides value to your company. Now, it can be your fixed assets, moving assets like land, your company inventory, your cash, or maybe intangible things like patents, trademarks, and software. Everything that your company owns comes under the assets, right? So as you can see in the description in the table as well, cash, accounts receivable, lab equipment, insurance, your lab computers, real estate, everything that your company owns comes under assets, and it's a part of your balance sheet, okay? And as you can see, the number here is actually the number which the FinancialForce accounting software assigns for your general ledger accounts. And these first digit, as you can see, of these account description, that specifies like which account number refers to the 5 major account categories, right? Like in this case, 1 refers to assets, 2 refers to the liabilities, 3 refers to equity, 4 refers to your revenues, and 5 refers to your expenses. And now that these numbers can vary, these first digit, depending on the accounting software you use. But generally, that is how you distinguish between your general ledger accounts. So again, what are liabilities? Liabilities are the record of all the debts your company owes, right? Anything that your company has to pay, whether it's accounts payable, wages, or your invoices payable. So here in this case, accounts payable, unearned rent, these are all liabilities. What is equity? Equity represents what is left of the business after you subtract all your company's liabilities from your assets. So basically, equity is equal to assets minus liabilities, okay? And in this case, it can be shareholders' equity or any kind of withdrawals that your stakeholders make, they all come in equity. What is revenue? Revenue is anything that your company is earning, either through sales of goods or services, right? So any income that is coming, that is that comes under revenue. What are expenses? Expenses are all the money and resources you spend in the process of generating revenues, right? So that can be salary of your employees, the rent that you pay for your buildings, any utility cost, any expense, right? As the word suggests, expenses. So chart of accounts has these 5 major building blocks: assets, liabilities, equity, revenue, and expenses. And this is what actually forms the basis of any financial accounting software, right? Because what you do is, once you actually implement a financial accounting software, you are asked by the implementation team for the chart of accounts. And the chart of accounts is this kind of table that you actually provide to them, and then they upload it into the FinancialForce accounting software, and then that the general ledger accounts are created. Let's see how the chart of accounts is loaded in FinancialForce accounting. So as you can see in this diagram, right, FinancialForce accounting actually uses a tool called Accelerate CLX to load your chart of accounts. Okay, so the table that I showed you, you have to provide the chart of accounts table to the implementation team. They actually populate that in something called Accelerate template, right? And then the Accelerate process is executed and your general ledger accounts are created. Okay, so that is something that you do as a bulk, right? So you provide the list to the implementation team and they run the process, and your chart of accounts are actually loaded and the general ledger accounts are created. Now, if you miss something in your chart of accounts and you think that you have to do a new addition to general ledger or any amendment to any chart of accounts, you need to do it manually, and the process is the same, right? You have to create a new GLA for that and populate that in the Accelerate template. So this is the process, and the first step in the implementation process of FinancialForce accounting or any accounting software. You have to provide a chart of accounts to the implementation team. They upload it, and then your general ledger accounts are created. So this is a screenshot of the FinancialForce accounting and how the general ledger accounts look once the chart of accounts is uploaded in the software. So you can see, right, like I told you, every type of liability or expense has a number associated to it, right? And the first digit actually indicates whether it's an expense or whether it's, and it actually tells you like what kind of expenses are that, right? So expenses is the first level, right? And then you can always define like whether it's an operating expense, it's other income expenses, or it's an interest and tax, right? So trial balance 1 means the first level, trial balance 2 means the type of liability that you have, and trial balance 3 gives you more detail about, like in the first line you can see, right? You have trial balance 1 as balance sheet, which is actually a long-term liability. And what does it mean by long-term liability? It means that this liability has to be paid after 1 year. Okay, so liabilities can be current liabilities, long-term liabilities. Similarly, your expenses can be from your incomes, from interest and tax, right? So if it's from interest and tax, it comes as a description as taxation, right? So this general ledger accounts in FFA gives you a complete picture of your chart of accounts, where what are the assets, what are the expenses, what are the equity, right? And what are your liabilities. Okay, so this is the first stepping stone for any FinancialForce accounting ERP, which you need to understand, and that is chart of accounts, right? If you are able to grasp this chart of accounts and able to create and understand these general ledger accounts within your accounting software, half of the problem is resolved, because everything revolves around it, right? As we will see in the next slides. Now, what is accounts payable and receivable, right? So as I told you, accounts payable, as the name suggests, is anything that your company. So let's take example of company A and company B. Okay. So when company A delivers a product or service to company B, company A records that account as receivable. Why? Because it has delivered a product or service to company B and it's entitled to receive funds from company B. So because it is entitled to receive funds from company B, so company A records that account as receivable because they will receive money from company B for delivering their products, right? And on the other hand, because company B would be paying the money back to company A for its product and services, right? So they will record the same transaction under accounts payable, right? Because they have to pay something back to company A. So company A records the same transactions as accounts receivables, but company B records it as accounts payable. So these are like opposite terms, accounts receivable and accounts payable. And this is the best and simplest example you can understand what is accounts payable and accounts receivable. Anything that, so like an example, bank loans, because they need to be paid to the bank, so they come under accounts payable. Any unpaid bills and invoices that you need to pay, they will obviously come under unpaid bill, under accounts payable. Similarly, any debts to suppliers or vendors, they will come under accounts payable. Anything that you receive, whether it's payment from customer or interest from the bank, that will come under accounts receivable. So just understand payable and receivable. Anything that you receive comes under accounts receivable. Anything that you pay comes under accounts payable. Okay. Let's move forward. So balance sheet, right? The fourth component, which you might have heard a lot in your FinancialForce Accounting ERP or software or any accounting software that you use. So what is balance sheet? Balance sheet has three building blocks, right? First one is assets, second is liabilities, third is equity. We discussed all these three terms in the chart of accounts. We know what assets is. Assets is anything that is owned by the company. Liability is anything that company is liable to pay. And what is equity? Equity is the difference of asset and liabilities, right? So whenever you are talking about balance sheet, only these three terms should come in your mind: assets, liabilities, and equity, right? And this is what balance sheet report displays. You take the balance sheet example of any company, you will come up with these three terms: assets, liabilities, and equity. Now, assets can be of different types. Liabilities can be grouped into different types, right? And that balance sheet report will actually display you the categorization of assets, liabilities, and the equity. So let's see an example of balance sheet report. So this is a very simple balance sheet report of a company. Okay, so as you can see, right? So assets, you can see these three terms here in the balance sheet: assets, liabilities, and equity, right? So these are the three terms you are going to see in any balance sheet report. So what is assets? Now, assets can be current assets, which can be your cash, your accounts receivable, prepaid expenses, inventory, right? So as you can see for this company, right, the assets value, right, from 2014 till 2018 is increasing, right? So it's always good that the asset value of a company is increasing, right? So it has started from 234,762, and in 2018 it's 305,483. Okay, and all these figures are obviously in dollar millions. So the company has this asset value in the year 2018, right? Then when we go to liabilities, again, liabilities can be current liabilities, long-term debt, other long-term liabilities. Okay, and as you can see for this company, the liabilities are It increased from 2014 to 2015, but then there was a downfall every year, and it's pretty much the same from 2016 to 2018. Okay, so this tells you that the liability, sorry. So this tells you that the liability of the company is decreasing, right? And the asset value is increasing, which means that the equity, right, which is the difference of, so here you see the shareholders' equity is $260,280 million, which is what? Which is actually the difference of the asset value and the liabilities value. So if you see the difference of 305,483 minus 45203, you will get the equity value. So this is a plain balance sheet report, in very simple terms, which it can be more detailed for every other organization, but it just has assets, liabilities, and equity. Now, another very important report that you expect out of a company's financial accounting software is the income statement report, right? Now, we saw that in balance sheet, we had three components, which was equity, assets, and liabilities. For income statement, right, you have another three components, which are the revenues, expenses, and profits, right? So as we talked in the previous slides, revenues is something that your company is earning, right? Any income that a company earns from either sales of goods or through its services, that comes under revenues. What is expenses? Anything that you are paying to your staff or your utilities or your infrastructure costs. These are all expenses. And what is profits? Obviously, your revenues minus expenses is profit. So in any income statement that you see or you generate from a FinancialForce accounting software, you are going to see these three components, right? So let's see a income statement report. So here, as you can see, it's a sample income statement report, right? So as you can see, for revenue, the net sales of the company, as it has been increasing, for the year 2015 is $233,715, right? So that is the total income that got generated for this year. And what are the costs, right, or the expenses? They are actually the cost of sales, which is $140,089. And how do we calculate profit? Is total income minus the expenses. So income statement report, and then it has other components, which are the operating expenses, the other revenue expenses, and it can be more detailed, right? As detailed as you want. But you will always see these three components, which are the revenue, your expenses, and your profit, right? These are the three components that make any income statement report. So let's move forward. And feel free to post your questions and answers in the chat box if you have any. Now, this is the cash flow statement, okay? And now cash flow statement just tells you and gives you an overview of the movement of cash in and out of the company for an accounting period, right? Now, the cash can be generated from your operations. Cash is something that your investors might have invested, or you might have got invested from somewhere else, and then cash from financing. So these are the three components of the cash flow statement. So as you can see, a cash flow statement report looks like this, right? Where you have these three components, as you can see: cash from operations, cash invested. Now this can be through capital expenditures or through acquisitions. And then we have the cash from financing, okay? And when we add up all this, right, you get this closing balance, which is the total flow of cash, right? So this cash flow statement tells you like where the cash is coming from and where the cash is flowing out, right? So This is, or in many accounting software, this cash flow statement is also called retained earnings. Okay, so either cash flow statement or retained earnings, any report that you're looking for can easily be generated if you understand the cash flow within the software. Now, this is a very important report, which is very important in terms of accounting. And it's important because you need to actually understand that the credit entries and the debit entries within a system has to match. Okay. So what generally the companies do is produce a kind of trial balance report or a report before generating any kind of balance sheet or income statement or cash flow statement, right? So what they do is they actually generate a trial balance report to see whether their debit entries or credit entries are matching, right? So a trial balance report generally has the particulars of what the transactions are, as you can see in this column. Then you have a reference number that is used to identify that ledger account on which the transaction has been done. Then you have a debit card entry and a credit entry, right? And then you add it up. And if they match, then that means your financial account entries are correct and there is no problem with it. But if they don't match, right, that means something is missing. Either if the debit is more than credit, you need to understand why is it not matching, right? And you need to understand, it may be that there is bank interest which might come next month, but you already entered it before, right? So you need, your accountants have to understand and adjust those trial balance entries to make the credit and debit entries equal. And once they are equal, then you are good to generate the report. So it's an internal audit report, right? That is used to check whether your accounting software is actually matching the entries or not. So I think most of the financial transactions, so what general entries are is actually a combination of your financial transactions that happen within your system. So general entries are records of all business transactions that are maintained within organizations, accounting and system. So it's like a bank statement, right? Where you define the date, right? The transaction date. Then you have the general entry where it tells you about what transaction was made for, right? In this case, it was for from a furniture account, $1,000 for debit, and it was credited to another bank account. So you have a debit entry and you have a credit entry, and it shows you the amount by which the respective account is debited in the transaction. So general entries are basically all your financial transactions that happen within the system, right? So it can be a long list of general entries. It's like a bank statement where you have a list of all the transactions with the transaction date, what was the transaction name, whether the amount was debited or credited. So it's a very simple term if you can relate to that banking entry, right? And these can be easily generated from a financial accounting software. Now, we have seen what basic accounting terms refer to. We have seen that we can generate income statement records, cash flow statement, balance sheet. We can know what our assets are, what our liabilities, what our equities are, right? But how do we do that without a FinancialForce Accounting ERP, right? And how does FinancialForce Accounting ERP helps us in that, right? So what it does is, because if you have to speed up your bookkeeping processes and save more time, right, you require a software that can do these things automatically, right? So it actually, like we talked about the cash flow statement, unless you know what cash is inflowing and you keep that entry, right, you cannot monitor it. So it actually helps you monitor the cash inflow and outflow across multiple bank accounts, right? So it is not that you have just one bank account. Your company may have maybe running multiple bank accounts, and you have to monitor cash from each of those accounts. And those accounts can be spread across many geographical areas, right, with different currencies in place, right? So you need a software we can actually do that kind of reporting. So it's important to monitor cash flow and for multiple bank accounts. Know what each asset costs, where it is, and how much it's worth now, right? And that you can get from the balance sheet, because it actually tells you the asset value, the liabilities, and the equity. Now, unless you have a FinancialForce accounting software for it, you cannot do that, right? You cannot do that in spreadsheets and Excels. See what is in sales pipeline, what is invoiced, and what is paid, right? Because all your invoices would actually come for billing to your FinancialForce accounting software. So you can see if your and with FinancialForce accounting, since it's integrated with PSA, right, from where the invoices are actually coming into the FinancialForce accounting software, you can see what the Salesforce, what the sales pipeline is, right? You can see the sales has been closed and the invoice has been generated, and then it has come to the FinancialForce accounting software, right? And whether that the invoice that has come to the FFA is paid or not, right? Then obviously you have tools and templates to generate financial statements. You can automate your revenue recognition and forecasting, because FinancialForce is actually built on the Salesforce platform. So it uses the Salesforce Einstein engine to generate reports and dashboards, right? Through the data that is stored within the accounting system. So you can use Salesforce Einstein engine with FinancialForce to generate all these kind of forecasting reports. Then obviously with these reports, you can have real-time financial reporting and analysis, because all your data that is there in the system is real-time. So at that point of time, you can generate reports which will give you a real-time figure of what is happening within the company. And you will know like whether your company is in bad health, financial health, or good financial health. And since, as I told you, FinancialForce is native to Salesforce CRM, right? It actually helps you integrate your sales team, finance team, and the service team together, right? So you can have all your sales pipeline defined, and you can actually see what invoices have been paid for those sales invoices and things like that. So it links Salesforce Objects to your general ledger because it's built on Salesforce platform. And we will see in the subsequent slides on how FFA is linked with Salesforce, what FFA objects are used, what Salesforce objects are used within the system. Use standard accounting reporting templates or create your own dashboards, because it's integrated with Salesforce. It can use Salesforce Einstein engine, and you can build your own dashboards within FinancialForce. And that is why we need FinancialForce Accounting ERP, right? Because it's a native Salesforce platform. It easily integrates with Sales Cloud. It easily integrates with PSA, and you have one silo system where you can actually see your sales, your invoices, your service team performance, and everything. So now let's see like what kind of objects can we see in the FinancialForce accounting system. As I told you, since FinancialForce is built on the Salesforce platform, it uses both the Salesforce objects and the FinancialForce objects. Okay, so when we talk about Salesforce objects, we know like Salesforce objects are product, right? The product that you're selling, the account means the company name, the contact, any contact name in the account, and then your opportunity, right? So all these Salesforce objects you can see in the FinancialForce accounting system, and these are all linked to your FinancialForce objects. Now, in FinancialForce objects, right, there are two types of objects that come along. One is company independent, and another is company dependent, right? So as the name suggests, company independent is something which is independent of your organization and is general, right, which is not related anywhere to your company, and it has to be there. And then there are some things which are company dependent in terms of they are related to FinancialForce accounting software and the company, right? So let's try to understand what these company independent and what these company dependent objects mean and what they are. Okay. So FFA objects company independent, right? Which mean that they are not related to your organization and they are general, right? They are general for any company. So as we know, general ledger account, right? Obviously, we saw in the chart of accounts that once you upload your chart of accounts, right, the general ledger accounts are created, right? So these are general accounts. They are standard all across and they don't vary much. And the most common general ledger accounts that we saw in our previous slides are revenues, expenses, liabilities, assets, right? So these are your general ledger accounts and they are company independent. They are not related to any company. Okay. Similarly, the second component that you will find in the FFA as an object is tax codes, right? Because you need taxes to be invoiced with your sales, with your invoices, with your bills, and they can be of various types. Okay, so they can be sales taxes, there can be goods and services taxes, value added taxes, and they vary depending on the country or in which region you are, right? So depending on whether you are in US or whether in UK, the tax regime is going to change. And that is why they are company independent, right? Because they are dependent on a region in which you are actually providing services to your client or in which you are located. All right. So, and then the third FFA object, which is company independent, is dimensions. Now, dimensions is adding dimensions to the transaction, right? So this allows you to maintain each segment separately. Okay, and we will discuss about dimensions with an example on what we exactly mean by dimensions and how it actually helps in reporting. So let's move forward and discuss these three company independent FFA objects in detail. So general ledger accounts, as I've already told you, they are, this is the same slide that we saw last time as well in the previous one. These are all your general ledger accounts that are created through your chart of accounts, right? And they give you a description of the expenses, the balance sheet, the liabilities, the assets, and everything, okay? So trial balance 1, trial balance 2, trial balance 3, and these are general ledger accounts like we discussed last time. Then we have tax codes. Now, as you can see, right, this is for taxes, tax codes. So you have state tax, okay, Texas state tax. Then you have Travis country sales tax. Then you have county sales tax, Midlothian city sales tax, Austin city sales tax, right? So these are different types of tax codes that are available depending on which region you are in, right? And all these tax rates may change or may vary, right? And since these are not dependent on the company, they are company independent. But this is something that you have to upload within the FinancialForce accounting software to get correct invoices based on the region in which you are operating, right? So make sure that you check these tax codes properly within the FinancialForce accounting software to get proper financial transactions. Now we were talking about dimensions, okay? So what are dimensions? So as you can see on the left-hand side, right, these are general ledger accounts for sales. So sales product, sales subscription, sales service. Then these are expenses, furniture and fixtures, salaries and wages, office supplies. Okay. Now we have got two dimensions in place for these general ledger accounts. One dimension is location, right? And another dimension is industry or department. Now location can be Berlin, London, Paris, San Francisco, right? So what you can do by defining these dimensions is when you report back or you pull out a report, you can see like what is your sales in a particular location, right? For your product, for your subscription. Similarly, which department is bringing in more sales, right? whether your sales is more for the government stuff, or for the healthcare, or for retail, or for sales, or for R&D and HR. So dimensions are basically, and you should set up these dimensions because they actually help you in digging into reporting more and analyzing your data more, right? So this has to be well thought through, and this is not just one. You can define n number of dimensions, and if you think you are not able to define it in the beginning, you can always add that later after you have implemented your software. Now, coming to the company dependent objects, right? There are 5 types of company dependent FinancialForce accounting objects. First one is the input documents. We will discuss about the input documents, on what type of documents are available in FinancialForce accounting. Then you have transactions, you have currencies, you have bank accounts, and you have financial year period, right? So we will discuss all these in the subsequent slides in what we exactly mean for these 5 types of company dependent objects. Now let's start with the input documents. If you're using FinancialForce accounting, you must have seen there are 7 FFA documents that are most likely to be seen, right? Number one is sales invoice, anything that your sales team raise as an invoice. Then you have sales credit notes, right? Which is if you need to provide a credit note to your customer for excess payment or for any other thing that you will find sales credit notes. You will find a payable invoice. That is something that you need to pay. Then similarly, you will have payable credit notes, okay? You will have cash entries, you will have payment, and you will have journal entries. So these are the 7 FFA documents that you are most likely to see in any FinancialForce accounting software, but these are specific to FinancialForce accounting, okay? Now, what are transactions, right? Transactions look something like this in FinancialForce accounting, right? Where you have the transaction number here, 1, then you have the transaction date, then you have the total debit amount and the total credit amount, right? And then you have the company name, the account total and all that, right? So any transaction that is happening is recorded as a transaction within the FinancialForce accounting software. So that is all company dependent. Now this is important, right? Because this is where people actually get confused, right? Because there are 2 types of currencies, as you can see, available within the FinancialForce accounting software. One is called the home currency, and the second is called the dual currency. And if you are using FinancialForce accounting ERP, you must be aware of that, right? So what is home currency? Home currency is the main working currency of a company. And what is dual currency? Dual currency is the reporting currency for a company. Now let's see, right? So here we have taken an example of a company called Merlin Technologies, which is based out of Canada, which is based out of US, and which is based out of UK. Okay, so it has offices in 3 countries. Now, see Merlin Technologies Canada because it's operating in Canada. The home currency or the main working currency would be Canadian dollar, right? And that is what it is. Canadian dollar is the home currency. But since it's a US since it's a US company, right? So what would be the reporting currency, right? It would be USD. So your dual currency for Merlin Technologies Canada would be USD, and the home currency would be Canadian dollar, right? So this is something that you have to take care of when you are creating multiple companies within the FinancialForce accounting software. You have to be aware that you properly choose your home currency or a dual currency. Most of the times what happens is people just choose a home currency and then they don't opt for a dual currency, and then all the transactions happen within that currency. And when it comes to reporting, since it has to be in USD, but since we have not selected the dual currency, we are just operating in Canadian dollars. It's almost a mess to get all these things sorted out, because everything is in Canadian dollars, and since we have not selected the dual currency, we are just getting every transactions in CAD. Okay. Similarly, if you see here, Merlin Technologies USA, since the country is US, the home currency would be USD, and obviously since the main entity is US, so both the dual and home currency would be the same. Okay. Now you can imagine what would happen for Merlin Technologies UK. What would be the home currency? It would be obviously GBP. Okay. And what would be the dual currency? It has to be dollar. Okay. So this is very important, and we have found with most of our clients that this is something which goes wrong, and then they end up fixing all these by creating new companies. By creating new companies, they then assign home currency differently, dual currencies differently, and then they pull up the reports, right? So it's very important to get these things right in the first place, because these are main FinancialForce accounting objects, and they have to be dealt very carefully. Now, bank accounts as normal, right? You can create a number of bank accounts, so multiple bank accounts within different countries, right? So this is all about bank accounts. It is a very simple screen that helps you understand the bank account names, but obviously it's an important step because you need to set up right bank accounts for your FinancialForce accounting. So I think this is a very basic understanding about the accounting software, the basics of accounting, and what you can expect in a FinancialForce accounting software in terms of Salesforce Objects and FinancialForce accounting objects. So we just wanted to keep it simple, just to make you understand about simple accounting and FinancialForce accounting and how they are related. And in the next webinar, what we are going to do is continue from here and move to the accounting cycle, right? Because that is what accounting software helps you with, right? Maintain the total accounting cycle, which is identify transactions, record general entries, post ledger entries, unadjusted trial balance, then adjusted entries, then adjusted trial balance, financial statements, close the books. But to understand this accounting life cycle and how we actually do that till the closing of books in a FinancialForce accounting software, you need to understand these key accounting things, right? Because if you don't understand that, you will not be able to understand this accounting life cycle, because like it talks about trial balance. So unless you know what is trial balance, what it actually does, you will not be able to relate to this life cycle. Similarly, journal entries, right? What is a journal entry? Then what are financial statements? Okay, financial statements are something that we talked about, whether it's balance sheet or the income statement or the cash flow statement or the retained earnings. Okay, and to understand financial statements, you need to understand the general ledger accounts, right? Equities, liabilities, revenues, expenses. Okay, and bank accounts. Okay, your currencies. How do you actually adjust the entries? Like I talked about in the trial balance report, it's a internal audit report that you pull in, right, to understand that the credit and debit entries are equal. And if they are not, you have to adjust those entries, right, so that your records are okay, right? So that is what it talks about. Unadjusted trial balance, then you adjust your entries, and then you pull out an adjusted trial balance report. And once you have done that and seen that the credit and debit entries are equal, then you move on to take your financial statements, which is either income statement or cash flow statement. And once you have done that, then you close your books, right? So we will go through all these steps in detail in the next webinar. Okay. And I think, and if you have any questions, just feel free to type in the question and answer chat box, and I will try to answer. And if you want this, obviously this slide presentation and the recording will be emailed to you. So you can actually go and talk to our experts by scanning this QR code or by typing on this link, right? And we would be happy to help you. We at AblyPro actually conduct these educational webinars to educate our clients. And I think one of the things that we have understood from our experience working with different clients is that a lot of people use FinancialForce accounting software, but they miss the basics of accounting, right? So if you think this was useful, I would suggest that go through these slides again and try to understand the basic accounting concepts and try to relate it with the FinancialForce accounting software that you're using. If you're using FFA, try to relate to these terms with the FinancialForce accounting software. And if you face any issues, right, let us know. Our team can help you out. You can obviously reach us at vcare@ablypro.com. And we are going to conduct more webinars like this in future to help you out. And I think let's wait for any, let me check if you have any questions and answers from anyone. Yeah, so someone is asking about when will this next webinar be on accounting lifecycle? I think we have not decided a date yet, but it would be sometime in the end of February that we will be conducting. Then we have a question from someone on how do I actually understand and relate these concepts to FinancialForce accounting software. So as I told you, I think go through these slides, try to get more information from either net or something. And if you face any more difficulties, obviously you can, as I told you, we will be mailing you these presentations. You can talk with our experts and they can actually guide you on any type of issues that you are facing with your accounting software, or any help you need in terms of accounting or any other thing that you are not able to understand, right? We would be happy to help you. We have an expert team who can actually guide you through the entire process. And obviously you can book a demo with us on FinancialForce accounting if you need to. These were just these slides, but if you actually want a real feel of how FinancialForce accounting software works and how these actually terms relate to the FinancialForce accounting software, we are happy to arrange a demo for you. I don't think we have any more questions. So I think thank you everyone for attending this webinar. It has been great interacting with you. And as I told you, if you have any issues, feel free to reach us. You will get this presentation and you can just click on this link or scan this QR code, and our experts will be happy to help you out in anything that you require, right? So thank you so much for taking time in attending this webinar. It has been great, and we look forward for the next webinar, which is, as I told you, is all about the accounting lifecycle, which starts from this one and moves through how we actually go through this accounting lifecycle and get it done within the FinancialForce accounting software. So thank you, everyone, and have a great day ahead. Bye-bye.